College. I am just let you know that I am recording this webinar. It will be on our YouTube channel just for people who can't attend this evening, and the link will be shared via the Ackland Burley Families Bulletin, but it will only record me, of course, not anybody else who is taking part. So thank you everyone for coming this evening. If you don't know me, I'm Laura Stanley. I work at Ackland Burley School in the sixth form. I'm one of the Progress and Pathways leaders. My responsibility is mainly around destinations, around year 11 into 12 enrolment, and also about destinations post 18. So I'm responsible for UCAS. I do work around apprenticeships, careers, and other things in that area. So if you have any questions about those kind of things, feel free to ask me later on. If you do have any questions during the presentation, you can use the chat function, which is at the bottom of the screen. If you just sort of hover over your screen, you should be able to find the webinar chat. Anything you put in there, I will be able to see, but it's a little hard for me to keep track of them while I'm talking. So I will leave them to the end, and then I will answer questions at the end. If you have any questions that are really specifically about your child that you don't think apply to other parents and other students, then please do feel free to email me directly, and I will answer any questions that you have. Lovely. Let's get going. There we go. That should be full screen now. Hopefully everyone can see. So I'm going to start with the very basics of student finance. So these might be things that you already know. So I do apologize if it's a little bit basic to start off with, but I know lots of people are coming at things from completely different perspectives and completely different amounts of experience with student finance. So just to clarify, Student Finance England, or SFE as it's often called, provides financial support to students from England entering higher education in the UK. So that means that your child will apply to Student Finance England even if they're applying to university in Scotland or in Wales because they live in, or Northern Ireland because they live in England. So it's only SFE that they will apply through. The two main costs that young people have while they're studying are their tuition fees and their living costs. And the student loans that they get from Student Finance are split into two different parts, one covering tuition and one covering maintenance or living costs. The amount they can borrow depends on the student's circumstances, the course, and where they choose to study, which we'll go into during this. We'll go into this evening. All monies from SFE are a loan, unfortunately, and they are all repayable on graduation or on leaving university. So who is eligible? All British citizens who are doing their first degree within the UK are eligible for student finance. All EU citizens with settled status, post-Brexit settled status, are eligible, and there are some other groups as well. So, for example, people who've been refugees, people who've been granted leave under the Afghan relocation policy. There is a list of people who are not EU citizens or British citizens who are eligible. It is important to know that the eligibility for student finance is based on the student status, not the parents. So it is based on your child's status, not yours. So obviously the first thing to do is to make sure that your child is eligible. So UK CISA can help you if you go through to their website. And actually, I think the best guide to it is the complete university guide. I think that kind of clarifies it and presents it really simply. There's also a link at the bottom there to the full government, comprehensive government information. All the links in this presentation are live, by the way, and this presentation will be on the Year 13 area of the Ackland Burley website after this evening. I can also email the slides directly to you if you prefer that. You could just drop me an email and I'll send them over. So once you know that your child is eligible, then the maximum tuition fee that universities or colleges can currently charge new students is £9,250 per year, and that is for every year that they are at university. So if they are doing a standard undergraduate degree, that's usually 3 years, that is £9,250 for 3 times 3 years. If they are doing a degree with an integrated foundation year, that will be 4 years. If they are doing a degree with a year, a sandwich year or a year out for another reason, then the fees can be slightly different around that. However, the amount they pay up front of that before they go to uni or college, or when they start, or even during, is zero. They pay absolutely nothing up front because this is what the fees part of their loan covers. The fees are currently fixed at a maximum of £9,250 a year. So no university, that goes through UCAS, no public university can charge more than that. There are some private universities, often places like film schools or art schools, that do and can charge more than that. But as private institutions, they are different, and they that often means that you can't get a loan to cover those tuition fees in the first place. Again, if you feel that might be the case, do let me know. But those institutions are really unusual. If your child has applied through UCAS, there's a very, very strong chance, 99% chance, that they will be eligible for the loan. This is fixed until 2025, so tuition fees cannot be more than that for 2023 entry, 24 and 25. Nearly every university charges that full amount. Unfortunately, it's very rare to find ones that charge less. So do be prepared for that to be the amount that is charged by the uni. And the full cost of those fees is covered by the tuition fee loan from Student Finance England. Students never even see that money. It doesn't go into their bank account. They don't have to physically pay it to anyone. It just goes straight from the government to the university without even involving you or your child. So that is much easier in many ways. Again, as I said, they don't have to pay tuition fees up front. They also don't have to borrow the full amount if they don't want to. When they go through the process of applying for their loans, it will ask them how much they want to borrow for their tuition fees. Most students do borrow the full amount, but if there's money that can be paid towards the tuition fees, they don't want to, there's no pressure on them to borrow the full amount. And this loan does not depend on household income. Every single eligible student attending university in the UK is entitled to the fees that cover, the loan that covers, their full tuition fees, regardless of your household income. This loan is repayable. As I said, all the monies are repayable, but it is only when the student's income is over £25,000 a year. Now, if you have another child, a slightly older child perhaps, who's gone to university in the past few years, you might be looking at that £25,000 figure and going, that's different. And you're right, it is. The government have lowered the threshold for repayment from this year. So if you went to university, if you started university in 2022, then you had up to £27,500 a year before you had to pay anything. That has now come down to £25,000 a year. So the repayment starts at a lower wage from 2023 entry. There are a couple of other changes as well, which I will, again, elaborate as we go through. The second part of the loan then is the maintenance loan. And this is what students get to help them with their living costs. So the main living cost that they will have is usually accommodation, but also things like books, clothes, travel, food, anything they need to live on while they are at university. Because the main cost is usually accommodation. If a student chooses to live at home instead of living in halls or living in or privately renting, they get less maintenance loan than students who live away from home, and it is partly to address that difference in accommodation cost. Now, all eligible students, again, regardless of household income, are entitled to some maintenance support, but this loan is means tested. So it depends on a couple of things. It depends on where they live. As I've just said, if they live at home, they get less than if they live on their own. It depends on where they study. So if you live in London, you get more loan than if you live elsewhere. Again, partly to do with the things being more expensive, especially rent and things being more expensive. And it also depends on the income of their parent or parents. And this is where your main role around the student loan comes in. It is providing the evidence that student finance need to make that assessment. Now, unlike the fees loan, the maintenance loan is paid directly to the student. It is paid directly into their bank account. They have to have a bank account to receive their maintenance loan. It can't be paid into an account in anyone else's name. So if they don't currently have their own bank account, they need to do that before they apply for student finance. Students are responsible for managing that money, including paying their own rent. So it is really important that they are aware of the importance of managing their money around this. Again, the loan is repayable, same as the fees loan, only when they've left and their income is more than £25,000 a year. So the amount that they can get, again, varies. So if they live at home and while they study, then they can get up to about £8,500 in maintenance loan. If they live away from home, somewhere outside of London, so say they go to Manchester or Sheffield or Birmingham, then they can get a maximum of £9,978 a year. This is each a year in maintenance loan. And if they live away from home and study in London, as you can see, it's quite a bit more, just over £13,000. But that really is necessary given the high cost of accommodation, of rent in London. The link at the bottom is to the student finance calculator on the government website. If you put in some rough details, it will give you an estimate of how much maintenance loan they are likely to get. So you can use that to work out your finances. Again, this is just a kind of a further breakdown here, comparing 2022 to 23 with 2023 to 24. It's gone up ever so slightly. It's not gone up by the rate of inflation, unfortunately. I think it's gone up by something like 2.7%. It's not a lot. So away from home outside of London, just under 10 grand. Away from home in London, 13 grand. And if they are so in some very few overseas cases, not all, they can get some loan. If you want to look at that in more detail, there is a link at the bottom to Martin Lewis's website there, where he talks about the student loan amounts. So university is expensive. Everything's expensive at the minute, but university is not exempt from this. So there are a few ways that your child can try to get a little bit more cash while they are studying. I would absolutely recommend that they look into scholarships and bursaries. Now, most universities offer scholarships and bursaries, and they offer these for all kinds of things. They offer them to students with varying disabilities of different kinds, students who just have challenging financial circumstances, or students from families that are lower income, or sometimes students who are just underrepresented either in higher education in general, or in that university, or just in that subject that they have applied for. And usually, nearly always, scholarships and bursaries don't need to be paid back. So this is just free money. However, the trick is that you can't apply for scholarships and bursaries through UCAS. You have to check directly with the universities that you have applied for, and there will usually be some kind of application for them to fill in. Sometimes it's really straightforward. Sometimes it will ask you for like a sort of some short answers about why you are eligible, or they might ask you again to send some evidence. For example, some evidence that they received a bursary whilst in sixth form. We can provide a letter for that kind of thing. There is one place that brings these all together, and it's called the Scholarship Hub. And this is as it sounds, like a hub website where you can put in the name of the university or something similar. Should just come up here. Here we go. Get started, and it will kind of search for you for different scholarships. So there's some useful information there. Oops. Just a few examples of some scholarships here. I just pulled some random universities. I tried to pull some from London and from elsewhere in the country. And if you go into these, then you can see the kind of scholarships that are offered and the kind of sort of circumstances in which those scholarships are offered. So this is Westminster. So they offer a £1,500 a year scholarship specifically for students who are doing a course with an integrated foundation year. There's a 10 grand a year, that's a big one, uh, scholarship supporting students from the UK who have financial need, who are from a black or mixed black ethnic background, who are doing computer science or engineering. So as you can see, there are quite a few conditions around that one. £2,500 a year for students with a registered disability, and so on and so forth. So there were, some considerable amount of money available there, and it is really worth looking into those. So moving on to the actual, the nuts and bolts bit then, the how to apply. Our students at Burley, I've had a talk from Jack Petchy, Wise Up, the Wise Up financial side about student loans. They've also had an assembly from me explaining how to apply for this, but just so you can support them. They need to go to the government website for student finance, enter their details first and register. And once they register, they will get a confirmation. As part of that confirmation, they will get a customer reference number, which they should take a note of and keep somewhere. Now, you can't support their application until they have applied. So so before you can do anything, they have to go online and they have to apply. So this is the student finance sort of home website. Everything you need to know, click on here to apply now, and that will take them through the process. There's also some helpful information if you are a parent in this website as well that you can have a look at later. And again, I've linked directly to. And there are lots of short videos on YouTube produced by Student Finance about the application process. Thanks, YouTube.
You get your next big idea, say sparkly ketchup. Applications are now open. If you're thinking about going to uni or college and planning to apply for student finance, you should follow these easy steps to make sure you get your money in time for starting your course.
Sorry, someone's just told me that the video isn't working there. I'm really sorry. I'm not sure. It must be the share that I've set up on here. I do apologize for that if the video wasn't working, but the links are embedded in here. So if you want to go and have a look, then you can do that later. I'm just going to stop the share of the PowerPoint and restart it just to make sure that everyone can see it and it's working properly. There we go. Hopefully that is working again. So the videos are really short. They're from Student Finance. They're just talking through the application process for students. It just explains there that students should make sure that they apply on time, because if they don't, then they might not get their money in time to start their course. And it just explains a few of the things that they need to complete that application. Now, one thing she does say in the video, which I wanted to elaborate on, is that when they apply, Student Finance will need to check their ID. It needs to check who they are. If your child is a British citizen, sorry, the easiest way to do that is with a passport number. If they don't have a passport, they can upload a photo of their birth certificate, but a passport is the easiest and quickest way for them to check their ID. If your child is an EU national, they will need their EU settlement share code when they apply. And if they are from elsewhere in the world, in that case, they will need to post off evidence. They will need to send off their original passport, residence card, or similar. The Student Finance website will explain to them exactly what they need to send. But in most cases, in nearly all cases, if they are a British citizen or an EU national, they do not have to physically send any evidence. It can all just be uploaded to the website by either scanning it or taking a photo with their phone. As I've already said, they need their own bank account. And that's something else that is covered in the video. So supporting the application. So as there is a link on the Student Finance website that is called Partners and Parents, and that's all the information that you need about what to do to support an application if you are a partner or a parent. Just to let you know, though, you don't have to. There is no requirement for you to support a student loan application. If you don't want to give financial details or personal details or whatever to Student Finance England, you absolutely do not have to. In that case, your child will still get the minimum amount of maintenance loan. So they will just automatically get the minimum amount, and that is just under £3,600. So that's, as I say, just a flat amount they will get if no parental supporting evidence is put through. They will still get the full tuition fees loan. So even if you choose not to support the maintenance loan, that will not affect their tuition fees. They will still get the full amount of loan for that. I'm just going to see if I can make this video work. Let's see. So let's see if it will let me share. It's going to have an advert first, of course, because it's YouTube.
Your child should apply for student finance as soon as possible to make sure they have their money in time. The quickest and easiest way to apply online at www.gov.uk/student-finance. Use your existing student finance account that you're using. You can't use the same account as a partner or child. Once you've created an account or signed in, you can give us your income details for the previous tax year. We'll confirm these with HMRC. Most parents don't need to send any evidence of their income, but sometimes we do ask for this. Don't worry if this happens, it's just part of our check to make sure that your child gets the right amount of student finance.
Okay, so no more videos. I think, oh, no more videos. It's way too complicated. Sorry about that. Right, let's go back to here. So I'm going to, again, they've given you a bit of an overview there, but I'm going to talk about a lot of these things in more detail here. So as was stated in the video there, once your child has done their application, then you should get an email inviting you to support that application. That's if they put your email address in. So you will need to create an online account for yourself. Once you get that email, it will prompt you to. And it will then prompt you to provide information about your marital status and your income for the previous tax year, as they've said. You don't normally have to send anything off. They don't normally ask for proof because they use your national insurance number and other details about you to check the information that you've given them. But if they do ask for some documentation, you can usually, again, just upload it to the website rather than having to go and put it in the post. If you don't get an email for whatever reason, but you know that your child has set up an account, then create your account anyway. When you've created it, you can click on support an application and then enter the customer reference number from your child's account, and then it will link them together. So even if you don't get that email, you can still go ahead and support the application. HMRC will then check the information that you've given them, which normally takes a few weeks. If you have to give evidence, it can take a bit longer, so around 6 weeks for them to then review any evidence that you send. That evidence, as I said, should be for the full previous financial year. Once Student Finance England have checked everything, they will message your child, they will email them to say that it's all confirmed and to tell them how much they are going to get. And they can check the progress of their application online. They don't need to ring Student Finance, which is great because it can be a bit of a nightmare getting through. The deadline is the 19th of May. So it's really important. You can still apply after that deadline. Student Finance doesn't close, but it's important that they meet the deadline to make sure that they get their money on time to start their course. Because that deadline doesn't close, by the way, just something else that's worth remembering is even if they decide that they don't want any student finance now, but it gets to February and they're broke and they decide they do want to apply for student finance, they can still apply even if their course has already started. In terms of changing their information as well, because if they apply for student finance before they've chosen their firm university, or of course before things might change in August when they get their results, they might end up going to a different uni, then they can just log into student finance and change their details and it will automatically adjust the amount of money that they get. So for example, if they were going to go out of London, they change their mind, they decide to stay in London, it will adjust the money for them. They won't lose out if they change their details later on in the year. So lots of useful info here, the campaign, student parent information. There's a frequently asked questions section on the government website. And this is really good, this bit here. These step-by-step guides are about sort of 60 seconds long, and they just go through screenshots from the Student Finance website, and they tell you how to do things like what happens if you forget your password, how to check the status of your account, how to change your information, all those, how to upload your any information they ask for, all those kind of things. There's about 8 of them, little brief guides there, and they are pretty good. So that's the applying bit. That's how you get the money in the first place. What happens then about repaying this money? Because I know this is the thing that lots of people are concerned about. As I've said, before, because everything is borrowed, everything has to be paid back, but you're not paying back 2 different loans. Everything is, when the student finishes university, it's all brought together to make one lump sum. So everything they borrowed for tuition, everything they borrowed for maintenance is added together to make one amount that they owe. And these repayments are based on the student's future salary. The monthly repayment is not based on how much they borrow. The overall amount affects the amount of time they pay it back for, but it doesn't affect how much they pay each month. And I'll illustrate this for you in a second. So it doesn't matter if they borrow £10 or that's £1,000 or 10,000, 100,000, 500,000 pounds. The monthly repayments stay the same. It's just the time that's affected. As I said before, they only make repayments when they're in work and they're earning over that repayment threshold. And this loan does not affect their credit score. So there is no kind of detrimental impact on their credit score by taking out a student loan. They don't. 25 grand is the threshold. If they're studying a full-time course, they start to repay the April after they graduate or leave. So you have a little bit of like of time between graduating and starting paying back the loan. There's a little bit of a grace period between. So that is graduating or leaving the course. If they decide to leave the course for some other reason, then they, of course, still have to pay the student loan back. Now, what they repay each month is 9% of anything they earn over 25 grand. So anything above that 25 grand threshold, they pay 9% of it back. If they're employed, PAYE, then everything just goes out of their pay via HMRC. So they don't have to fill in any paperwork or really do anything. The money is just taken from their account. If they're self-employed, it's a little bit different. If their income falls to 25 grand or below, then the repayments just automatically stop. So if they lose their job or they get a less well-paid job, then the repayments are stopped. And any loan that is sort of outstanding is cancelled 40 years after they start repaying. So if they haven't paid it off within 40 years, it is written off. Again, if you've got children who've been to university in the last few years, you'll notice that number is different. It used to be 30 years after entering repayment. It is now 40 years. So there's an extra 10 years of payments there, unfortunately. So just to give you like a little illustration of what the monthly payments might look like. As I said, if you're earning 25 grand or below, they're deducting 9% of nothing. So you pay nothing. If you are earning 30 grand, they are deducting 9% of 5 grand of what you earn over the 25. That works out, if you just divide it by 12, really basically, about £37.50 a month. If you earn 35 grand, 9% from 10. And if you earn, the more you earn, obviously, so if you earn 50 grand, then it's £25,000 over the threshold. So you are paying considerably more. However, it doesn't matter how much you borrowed in the first place, because that's irrelevant. It's the amount over the threshold, not the amount that you've borrowed. So as I say, to do a sort of quite silly illustration here, say you borrow 20 grand and you earn 35, you're repaying 9% of everything over £25,000. So you're going to pay back £900 a year. If you borrow 50 grand, you're still repaying 9% of everything over 25 grand a year. 900. If you borrow, just to be absolutely ridiculous, £1 billion, you're still only repaying 9% of everything you earn over £25,000 each year. You will it's if you borrow 20 grand, you'll obviously pay it off a lot quicker than the student who borrowed £1 billion. So I think it's really important for students, young people, not to be frightened of actually borrowing the amount of money that they need, because they're not going to have a bigger bill because they've borrowed more. They're just going to have a bill for longer, which obviously it does matter, but that's less intimidating, I think, than thinking, oh gosh, if I borrow more, I'm going to have to pay back loads more of my wage each month once I graduate. So on to interest, everybody's least favorite topic, certainly at the moment. Now, unfortunately, talking about interest on student loans in previous years has always been quite quick and quite easy, because I've just gone, oh, interest rates are really low, it's fine, it actually doesn't cost that much. Unfortunately, with the situation that we're in now, interest rates on loans are something that that were climbing, and it has actually been addressed by the government now. It is important to know that interest is charged on the loan from when it's taken out, not when the degree is finished or the student leaves university. So even while the student is studying, the loan will be accruing interest. Now, it's usually based on RPI plus 3%. However, because interest rates at the minute are so high, just this week, last week, the interest rate on student loans has been capped at 6.9%. So there cannot be more than 6.9% charged. And when the interest rates go down, then the interest rates on the loan will also go down. And hopefully we will get back to a situation where things will become a little bit more stable. If you want to do a bit more of a deep dive into this, there's a couple of links at the bottom here. The government website there has several examples of what you pay. And Martin Lewis has done if you're interested in this, a really good deep dive into loans, interest, repayment, and what it all means in a long article on his website. Very briefly then, I just wanted to mention managing money. Again, Jack Petchy did a really good session on this with Year 13. We have done some sessions in personal development at Ackland Burley about managing money, but it is really important that students realise what that maintenance loan is for. It is not just it's not just fun money. It is for accommodation. They will find that they will need study materials. Books can be extremely expensive. Textbooks can easily be 50, 60, 70 pounds each. Copies are available in the library, but they may find that they need to buy some of their texts. Photocopying is also an expense. Travel, if they live on campus, travel costs might not be so much, getting to and from lectures, for example, but coming home, if they live out of London, there will be travel costs to factor in there. Food and drink, obviously their phone bill, their internet, anything they want to go and do. We very strongly recommend that students have contents insurance, especially if they live in private rented accommodation, because otherwise, if anything does happen, if they are broken into or anything unfortunate happens, they won't be covered. They will need to pay for a TV license if they want to watch TV or they want to use iPlayer. Plus any other media or entertainment they want, and just any other of the general day-to-day costs that come with just you living. That although the maintenance loan sounds like a massive amount of money, it actually doesn't go that far when you factor in everything that it needs to cover. It is paid into their bank account, as I said. So if they're not used to paying for their own Spotify or their own mobile phone contract or whatever, then they may have to get used to that quite quickly. They'll have to set up their own standing orders and direct debits and sort their own rent and all that kind of business. Really important for them to know is that they cannot get the next term's loan early for any reason. So even if they spend all their money, then they cannot ask for an advance on their student loan. It will only be paid at fixed times. It's paid each term, the same amount each term. So they can't get it early. I do think that's quite good, because it means that they don't suddenly get like 13 grand at the beginning of September, and all the stuff that could happen with that kind of windfall. It is paid each term. Now, if they do run out of money, then universities all have hardship funds, but these are usually also loans. So if they do need to take a hardship fund, so for example, if they run out of cash, or if their student loan is delayed for some reason, so they can't pay their rent or whatever, they can ask their university, but they will normally have to pay that loan back as well when they get their next installment of their money. Do be aware of student bank accounts. They often have really attractive looking, huge overdraft facilities, often thousands of pounds worth of overdraft facilities, but these are not free. And you can end up getting trapped in debt for a considerable amount of time if they use all that overdraft and they're spending up to that overdraft limit all the time. Not only are they stuck with that bank, but they're stuck paying overdraft fees. So it is really good to just have these conversations with them beforehand about budgeting and managing money, because there are lots of things involved that they might not be expecting. What happens then if they drop out? So we don't want to think about this. We don't want to think about dropping out, but it does happen. Some people decide that university is not for them, or they decide that that university or that course is not for them, and they leave before they graduate. So the bad news is, unsurprisingly, I suppose, they have to pay back everything they borrow. So the fees loan, for example, the first two installments of the fees loan are paid at the start of terms 1 and 2. So this is from the government to the university, and then the last one is paid in the third term. So, and that equates to 50%. So if you drop out, basically, it looks like this. If you drop out during term 1, so in your first year, term 1, they will owe just under £2,500 in fees. If they drop out during term 2, they will owe for term 1 and term 2, which is £4,500, 50%. And if they drop out during term 3, they have to pay for the whole year in terms of fees. And that applies again with year 2 and year 3, if they drop out later in their degree as well. They also have to pay back any maintenance loan that has been paid to them. So again, as I've said, it's paid in those 3 equal installments. If they drop out during term 1, they pay 1 term's worth of maintenance loan back, term 2, 2 terms, term 3, the whole year, and the same into year 2 and year 3. And they also pay interest on any of those loan amounts, because as I said, those loans start accruing interest from when they are paid to the student. If they've taken any grants or bursaries, they usually don't need to be paid back, but it's worth checking. And another thing to look at is if they do drop out, or they're talking about wanting to drop out, is to check if they are bound by any kind of contract on their accommodation, because they might have to pay for the full year, even if they leave midway through. Now, if they're in halls, you could often speak to the university and try and negotiate that. But if they rent privately, then they are likely going to be stuck in a contract for a year. So something to consider. I've seen this quite a few times. What if they start a course in geography at Sheffield and they decide they don't like Sheffield and they don't like geography? They actually want to do history at UCL. And so they drop out of Sheffield and they reapply for UCL, but they've been at Sheffield for a year. What happens then in terms of the financials? Well, you're only usually entitled to full funding for your first undergraduate degree, even if you don't graduate. So you may get only partial funding for a degree if you drop out and restart. So whether you do that immediately or whether you decide to go back a few years down the line, you will get some funding. They will get some funding, but it might be reduced, unless there is some kind of compelling personal circumstance why they have dropped out. So if it's not that they just don't like geography, if it's that they have, an illness or a bereavement or some kind of upheaval, then that will be taken into account if they have to stop and restart. And every student is also entitled to a year of bonus funding in case your plans kind of go awry. So this is usually if you fall ill in the middle of your course, or you have to take a year out for some reason and go back, and that funds like an extra year of study. As I say here, I had this because I fell really ill during the first term of my 3rd year of uni, had to take the rest of the year out and start the 3rd year again. But I still got finance for that, sort of restarting that 3rd year. So there are safeguards and things in place if things do go wrong, just to kind of make sure that students can finish their degrees. Just finish up there before we go to some questions. a few tips. I would say try to ignore any panicky media stuff about student loans, because there's always loads of like nonsense floating around, and there's also always lots of like shrieking and panic about and massive numbers being bandied about. But actually, when you look at the amount of money that it costs per month on graduating, it is nearly always worth it. The amount of money that you pay back is nearly always worth the degree, the education that they got. Um, there are some really good there's some really good impartial advice out there. Martin Lewis, as I mentioned a few times, is really good for this. His website's quite dense, and you and not the most user friendly at times, but there's lots of good stuff on there. Please check what your child is eligible for. Make sure that they share any details with universities, especially if they have any sort of diagnoses of any or any disabilities, any mental health challenges, because that might mean they can get some more money, or it might mean that they're entitled to a laptop or some special software or something else. Get everything that you can. Check for scholarships or bursaries, because it's free money. My advice would generally be to accept as much as you can initially in terms of loans, because you often don't know how much things are going to cost. If your child doesn't spend it all and they want to pay it back early, they can. But it is better to have the money and not need it than to run out sort of partway through the year. And have a look at things like how much have a look at the university accommodation. How much is it generally per week, per month? How much is it? How much is private accommodation in that area? I talked about the minimum amount of the maintenance loan earlier, like £3,500. Again, it sounds like a decent amount of money, but if you're paying £200 a week for accommodation, which is not unheard of, certainly not in London, then you're looking at, 20 weeks of accommodation before there's no money left. And that's not with any other sort of expenses involved. So, it can get really pricey if and that's the reason why it's worth applying for these loans when you can, to get that help when you can. If just a note as well that students only apply for finance in the year that they are going. So if your child has deferred, so they're starting in 2024, not 2023, they don't apply now. They apply this time next year. And again, if they haven't applied through UCAS this year, they're planning on doing an art foundation, or they're planning on taking a year out or whatever, then again, they will apply next year. It doesn't change very much year on year. The application process doesn't change very much. So the information that you've got now should still be relevant, fingers crossed, in a year's time. If you have any questions, you can email me. I work full-time at Burley, Monday to Thursday. I don't work on Fridays, but just drop me an email anytime and I will get back to you. I'm always happy to discuss via email, or we can easily arrange a Zoom call or something if that is easier. At the end, there are lots of useful links. The calculator, the link to the student loan stuff. Student rooms, Save the Student are really helpful sort of guides that get rid of some of the more boring government language and actually make things a little bit easier to read. Contact for Student Finance England if you need to get in touch with them. The whole money saving expert link there, the UCAS link to SFE, and then all of the social media stuff for student finance at the bottom, because they share a lot of like videos and sort of easy to digest, easy to follow sort of information through their social media. Great. I'm just going to take a sec to have a drink. And if there are any questions, please pop them in the chat and then I will answer in a couple of minutes. Okay. First question, just really easy one, is can you access this PowerPoint if students are based at a different school? Absolutely. Just drop me an email and I will send the slides over to you. Or if you go onto the Ackland Burley website, not today, from tomorrow, go onto the Ackland Burley website, the year 13 section, it will have this PowerPoint in that section. So you can download it from there. Or as I say, I am more than happy to just send it over. Just going to run through the questions in order. If parents are not together, which income do you use? So you use the income of the parent that the student lives with most of the time. So the primary, the parent who has the primary caring responsibility, who they live with most of the time, that is the income that you use. You don't have to use both incomes for that. If they are not, some students are not sort of financed by either of their parents, so they don't. In that case, they need to put that in differently. But that won't be the case for you. If the child spends about equal amount of time between parents, they will need to choose one. That doesn't sound great, but yeah, they need to choose one parent to support their application. Let's have a look. Yeah, sorry. Some apologies about the sound and the issues with the videos earlier. So would the amount they get in maintenance be affected if your financial circumstances have changed and less tax you due to redundancy? Yes. So on the student finance website, on there is a section about if your income has changed a lot recently, and there is a guide there to what to do if your income has changed substantially in the last financial year. If you study a course with a foundation year, will it cost 4 times 9,250? Yes. If you study a course that has an integrated foundation year, you pay the tuition fees for each year that you are at university. So that will be 4 years. The exception is if your child is doing an art foundation, because art foundation is classed as further education, not higher education, and therefore it is free if they are under 19. But that also means that they don't get the associated loans that come alongside higher education. It is only really art that has that separate foundation route, though. Any degree that is, a degree with a foundation year, you have to also pay the extra tuition fees for the foundation year that you are at the university. You can get a maintenance loan for the extra year as well, of course. So question, which parent should I choose? The parent with a higher income or the lower income? Now, it's totally up to you, but the higher the income, the lower the loan amount will be. So take that information and do with it as you please. If I drop out in one of the years, am I still liable to pay that year's loan? Yes, you are. You are liable to pay up to the point that you drop out, both for all the years that you've been at uni. So as I said at the end of the presentation, if you drop out in the first term of your first year, you will owe about £2,500 in fees, and whatever your maintenance loan was, a third of your maintenance loan for that year. If you drop out in the first year of your third year, you will owe 2 full years of fees and maintenance loan and that one term of the third year. So you owe everything that you what would the interest be for 3 years? I'm not a maths teacher. I won't be able to calculate that off the top of my head. But the interest rate is currently fixed at 6.9%. So it will be 6.9% of everything that you borrow. No, sorry, you cannot get a maintenance loan for art foundation. Sorry, because it's further education, not higher education. So the loan is you can only get maintenance loans through Student Finance England for higher education courses, not further education courses. So the benefit to Art Foundation is that there's no tuition fees, but there's also no maintenance loan. Whereas a degree, any other degree with an integrated foundation year where you go off to university to do 4 years instead of 3, you can get a maintenance loan for that, but you will need to pay fees as well. So let's just look. Anything else? Sorry, I'm just flicking down and reading. What is the average uni accommodation price for cities outside of London? So I don't, I don't know exactly. I think so for 2021 to 22, I'm trying to remember, I told students this. Outside of London, it's about £160 a week is the average cost outside of London. But that is more expensive in cities like Birmingham. It is cheaper the further north you go, generally, the cheaper it is. There are some exceptions. Places like York is quite expensive because it's quite an expensive place to live. Scotland tends to be a bit cheaper in terms of accommodation, unless you're in Edinburgh, which is very expensive. But I believe, I will double check this, but I'm pretty sure it's about £160 a week is the average outside of London. Okay, so I'm going to read this one out just so I can answer it in a way that makes sense. At what point this year are you in a fixed contract about the money? As in, if you're unsure about going in 2023, when do you have to make your final decision by? So you are not in any kind of contract until you go to university. So what will happen is you apply for your student loan, you get the notification of how much you are entitled to. Results day comes, you get your offers from your university. Let's say you get this, your student gets the 3 Bs that they need, they get into their firm choice. The university will then contact them, and that student will then have to confirm with the university that they are going. That's the first step. They then have to turn up at the uni, and it's when they have confirmed with the university that they are going, that will then start the process of student finance sending them the money. But they don't send them the money until quite close to term start. So for example, if term starts on the 10th of September, they probably won't send them the money until a few days before that. That is the point that your contract kicks in. Now, what you could do is if they then change their mind on the 15th of September, they can then withdraw from uni and just pay, like they could just pay their maintenance loan back immediately. I think in that case you might be able to negotiate that they haven't been to any lessons, they shouldn't have to pay their fees loan, but that would be something that you'd have to take up with student finance itself. Once they are into the course, certainly a few weeks into the course, they owe that money, but they have got until term starts to make a decision. There's no contract. Just by applying for student finance, you're not entering a contract. You have to actually start the course. If child lives with both parents, is the income judged as a combined total? Yes, it is. It's the household income. Yeah. Excuse me. Okay, I think we are just about there. So thank you very much. I'm really sorry about the chaos with the videos, with the window sharing there. Hopefully you can, as I say, you can find the PowerPoint and you can watch them if you wish to. And we did at least see a little bit of the one aimed at parents. If you want to watch me chatting through this again, then it will be on the YouTube channel, or as I say, I can just send you the slides so you can look through it in your own time. They will also be on the Ackland Burley website. If you've got any questions, please do get in touch. I'm more than happy to discuss any aspect of student finance, either by email or in a one-to-one meeting if that works better for you. Thank you very much, everyone. Good luck applying, happy applications, and have a great evening. Oh, my email, let me just, it was on the end of the presentation, but I'm just going to type it in the chat now. So it is lstanley@acklandburley.camden.sch.uk. I'm just taking a note of any email addresses that people have put in the chat. Lovely. Thanks very much, everyone. Goodbye.